Hey everyone, welcome to another episode of The Remote Real Estate Investor. I'm Michael Albaum, and today I'm joined by my co-host Mark Woodling, and we're going to be talking to our certified agent, one of our certified agents out in Montgomery, Alabama, Michael Atkins, and he's going to walk us through everything our buyers need to be aware of when they're investing in Montgomery. So let's get into it. Michael Atkins, thanks so much for taking the time out of, I know your very busy schedule to join us today. Really appreciate it.
Yeah, it's nice to talk to you guys.
And you are down in Montgomery, Alabama, right?
Yes, sir.
Fantastic. And I know that Mark and I know a little bit about your background, but for all of our listeners who are new to you, I would love to hear a little bit about who you are, where you come from, and what your background is in real estate.
Yeah, so I got my real estate license pretty much as early as I could, and so I've been practicing for about 15 years. But when I started, I had lots of hair, looked like a kid, no wrinkles on my forehead, and out there trying to advise people on buying and selling real estate. And so here's this kid trying to tell us what to do. It just didn't go over very well.
Yeah, I know how that
Didn't
goes.
have a whole lot of clients. I ran across these folks that owned about 20 houses, and they were looking for a new property manager. And they're like, hey, if you'll manage our properties, we'll buy houses through you. And I guess they found a great sucker for that. So I was like, yeah, this sounds like a great deal. And so I had no training, no experience, no property management software. I just got like a box of keys and, hey, go have at it. And it didn't take very long for me to figure out, like, hey, I got to figure out some kind of system. And so I started operating with Buildium. Was buying them more properties, picked up some more investors. And this was kind of at a time when, probably everybody that's buying a house right now would love to bought everything on the market at that time. Most of the investors I ran across didn't know what an Excel spreadsheet was. The house looks great. Yeah, I'll pay cash. Let's just buy it. And we're negotiating $5,000, $10,000, $20,000 under list price. And there was no real strategic math problem that we're doing about purchasing properties, what we could rent it for. It was just kind of, hey, the house looks nice, good bones, rent it for around this number. Sure, it sounds great, So got up to about 80 properties. I was managing about 80 by myself.
Wow.
And it was a lot to do then. It just felt like I was going from one emergency to the next of, hey, these people haven't paid rent. We got to start the eviction process. Oh, by the way, I'm $1.38 over on this account. So it means I made a mistake someplace else. So I need to spend the next 3 hours figuring out what went wrong where. And then, now we got a bunch of vacancies. So I have to supervise these guys remodeling the houses so I can get it back for rent. And now my phone's exploding because I have, so many properties vacant that I need to rent. And it was really like, oh man, I'm at my peak of what I can handle. And, I ran across another guy, Blake Lawley. He's my business partner with the property management company. And he was really passionate about property management, and we decided to team up, and we grew it from, he had 100 properties he could bring on, and that made us to 180, and we kept growing, and we've been together for about 3 years now, and we're up to about 680 properties. And so we have a whole team and staff to help take care of the different aspects of property management. I don't have a whole lot of responsibilities in property management now, but I've definitely been in the trenches, showing the rentals, meeting the people, very familiar with most of the neighborhoods in Montgomery. Can go street by street and say, I know that house, I've been in that house, I've been in the one across the street, I sold that one for that, this one rents for this. Very familiar with the market. That's kind of my background. That's how I lost my hair.
And did you grow up in Montgomery?
Yeah. I grew up in Montgomery, went to Hooper Academy, a little bit south of town, and went to Auburn University, Montgomery. Got my bachelor's degree there, and been practicing real estate here ever since.
Awesome.
That's awesome. Hey, Michael, and one of the things that you told me that really impressed me when we first started talking about bringing you on as a certified agent is you knew every agent in town. So anytime an offer is presented, you can make a phone call and really get that little bit of extra information that helps our buyers know where they need to be when making an offer. So I was always impressed with just your ability to communicate. So being from the area and down in the trenches as an investor and property manager, that's rock solid in what we're looking for our buyers.
Yeah, it's due to the volume of transactions that I do that really allows me to interact with other agents. And I'm looking at the market every day. I mean, part of my routine in the morning is look at what properties just came on the market. And I'm looking at the agent, I'm looking at the agent notes, and I'm trying to say, hey, is this a deal? Do I have somebody interested in this? Would this be a good investment property? And that's just part of my daily routine. Of course, I'm not looking at every house on the market. There's not a bunch of 300, 400 million dollar investors out there, but the properties that are basically under 200,000, those are the ones I'm looking at, trying to figure out, hey, would this be a good property for an investor to pick up and add to their portfolio?
And Michael, I'm curious, are you an investor yourself, or having seen the industry, are you so turned off by it?
Oh, no. Listening to your podcast about maybe way to budget money and save money, I would say that that's part of what has moved me to be an investor, because I didn't want to be reliant upon only my commission. So I felt like that could be a little bit of conflict of interest. So like if I had a buyer that's looking to buy a house and I really want them to purchase this house because I got a car payment coming due. So I sell real estate because I like to. I'm at the point where I own enough investment properties so I don't have to go out there and work every day. I have income coming in from my rental properties. And so I'm indifferent whether you buy this property or not. The commission isn't something that is going to make or break this month for me. It's I'm really passionate about real estate and helping people get properties, investment properties, or personal homes because of the actual helping them. It's not so much about the commission. The commission is part of the equation, but if I don't sell, you don't need to send me a thank you letter so I can pay my rent this month or make my mortgage payment.
That's such an interesting point. I ask this question of every agent, every property manager we speak to, and I'll often get feedback and pushback from a lot of our listeners or other buyers and say, well, if that property manager or that agent is also investing in real estate, why would they give a deal to me, or why wouldn't they handle their own vacancies first? And the answer that I've always given is, well, they understand the business. If they're an ethical person, they're going to be treating you right. But I've never heard that answer before from the sales side is, hey, you know what? I don't really need this commission. I don't have to sell this property to you to help, feed my family or make my payment. So I love that. And I think that's an even more of a reason to work with folks that are investing and also either managing or selling properties. No, that's great, man. I love that.
Yeah. So when I'm talking to a buyer and I can feel that anxiety or the nervousness, and it is natural. I mean, you should have a little bit of anxiety or nervousness. And, when I hear that or feel it, I want to go ahead and get to the point like, hey, where are we nervous about? And so if there's something that's giving them anxiety, we need to go ahead and air it out, figure out what the problem is, and see if we can't work around it or sometimes it can be super simple. Hey, I'm worried about this AC going out next year. Well, why don't we get a home warranty? Or let's go ahead and have an AC man go out there and service it and check it out. Give us an estimated lifespan of it. Those are just things that are kind of, it's not one of those things that I want the sale to happen so bad that I'm trying to overlook the little points of anxiety. So if we have anxiety, let's go ahead and talk about it, get it out there, get it figured out. At the end of the day, if the sale is not, if it's something you're not comfortable with, we don't need to do the deal.
That's great. That's great.
And another thing that Michael and I had talked about when we brought him on board was having the property management background is such a key part of who he is and how he fits into the model. He's not just selling you on a property, but he wants to see a long-term relationship go on and potentially be the property manager for you. So he's not just going to put you in a property just for the sake of the sale, like he's saying, but that property management piece is also an accountability piece where, you're going to be talking as often as you need, because this relationship could go on for a few years. So yeah, that's where we saw that lack of pressure that Michael was putting on, but he's got his sales skill down, as you can hear, but it's not so much where it's a pressure situation. So that does, although people need to move quickly and you got to put a little pressure on them in that instance, but maybe not so much about the pricing part.
Yeah, there's always a sense of urgency. So I mean, it's almost the transactions just have a natural progression, and you're trying to push it along, make sure we meet the estimated close date. I think that if I wanted to convey something, it's that I don't need this commission, and I'm not pushing you to buy this house so I can make a commission. I'm pushing you to buy this house because I think it's a good investment for you, or it's meeting the goals that you have.
No, I love it. And Mark, you bring up such a great point. And one of my personal biases and preferences, frankly, is to work with agents who are property managers or property managers who are agents, because let's just call a spade a spade. Agents get paid when they sell. That's how they make their money. And property managers get paid when they manage. So if I can hitch my cart to the property manager and an agent, I know that agent's not going to sell me a lemon. Because if the agent's only an agent that sell me a lemon, they move on, well, they got their commission, they can call it a day. But if the agent's a property manager also and they sell me a lemon, well, now you just sold me a headache, and you just sold yourself a headache. So I love the duality of that. So for any other agents listening out there, I encourage you all to look into the property management side of the business too, because I think it is such a beautiful marriage, and it can often be so symbiotic. You get the short-term commission aspect, and then you have that long-term relationship as well, which, as Mark, you mentioned, can be so powerful.
Yeah, I mean, the last thing I want to do is sell you a product that we're going to have weekly discussions about the problems. So, I want you to buy this investment property, and yeah, you didn't notice this. Well, no, I guess not. So, it's one of those things that I'm really trying to find you something, a good, solid property. There's a million different aspects to a single family rental, but, trying to catch the big ones. And then there's, so I looked at a property the other day, and it had several large pine trees in the backyard, and the pine trees don't bother me so much, but one of them was leaning over the neighbor's house. And it was a strong lean. It was a very noticeable lean. And, I was thinking, I was like, man, gravity's going to work eventually. It's not going to go away. And so it's one of these properties where, that tree needs to be addressed. And, it might slip through a home inspection, or, somebody may look at it and not notice it. But I'm there and I'm seeing it. And it's one of those things that, we could argue over which insurance company is going to take care of it, but that's a headache for somebody coming down the line. And it's better to go ahead, talk about it, figure it out now on the front end, instead of, having a very frantic tenant and, lawyers and insurance agents calling you in 6 months about this tree.
Oh, I was just going to suggest, moving into kind of the market areas, because that's the part where I'm really interested. The properties are, really going to come and go on roof stock. But part of what I was going to say is, we found Michael after we found Montgomery. So sorry, Michael. Yeah, we had to research the market first, and then we found you as one of the better agents in the area. So we reached out. But, one of the big things about looking at markets with roof stock is, we're looking for economic trends and a lot of really sweet spots in markets that maybe there isn't a large institutional investor presence or iBuyers active. And we found Montgomery, but what I wanted to say also is that it's actually the third capital that we've done a podcast on in just the last, few podcasts. So we started off in Columbia, South Carolina. We just talked about Jackson, Mississippi, and now we're talking about the capital of Alabama, which is Montgomery. So, part of the research I did was, hey, it's the second largest city in the state. You have, government institutions. You have, military presence. You have Hyundai as a major manufacturing facility, and all those things are flashy to us. But going a step deeper, maybe Michael, this is a good opportunity for you to give us a little information about what's happening in Montgomery that you think is really leading to the growth, leading to job opportunities, or just the overall kind of investor sentiment that our buyers would want to hear about.
So we are home to the state government. That's one of our largest employers in the city. We also have Maxwell Gunter Air Force Base, and part of that is their Air War College. A lot of military guys will get stationed here for a year or two, and that's kind of important because they're coming down for a short period of time, and it's probably not long enough for them to consider buying. So they're part of our tenant base, and they'll come in every year. They'll be here for about a year and then they leave. And usually they're great tenants, and they usually like the nicer rentals. We also have a Hyundai manufacturing plant in town, and they employ a lot of employees. And not only does Hyundai, but some of their tier 2 and tier 3 manufacturers as well. I feel like those are our major employers right there. We have a couple universities like Troy State University, Auburn University at Montgomery, Alabama State University. I was looking over some of the Census Bureau statistics, and I think 33% of our population has a college degree, which I thought that was kind of high. I may be wrong. That's kind of the demographics to the city. One of the things that we're known for is our property taxes. We're one of the lowest property taxes in areas for the country. I think Hawaii is known for it, but I imagine the prices there are pretty expensive for Hawaii. But we have low property taxes. One of the things, a negative thing we hear about often is the school systems. The schools in Montgomery usually don't are in the red side of the level on Zillow. They're not going to have the 5-star schools for the most part. But I think one of the the things to look out for that is they just passed a property tax increase. So just talked about how low the property taxes were, and now I'm telling you about the increase in property taxes. Well, they passed I think it was a 10 mil increase, and so on average that should be about a $12 increase per month for the average house in the Montgomery area. And in doing that, they're going to raise several $1 million. It's going to go towards the school. I think it's $33 million annually, and that's I think that's going to go a long way. And I think when they passed that bill, it came with some checks and balances to kind of hold the school system accountable to try to make sure that produces results to increase the schools. And so, some of the investors that come to town ride around, and the feedback I get from them is like, "Hey, Montgomery feels like this city that exploded, a couple years ago, and it seems like you're on the cusp of that." And so I think there's several things that we have going on that should lead to a productive and good, positive manner moving forward.
That's great.
One of the things real quick, Michael, is I studied the census as well just before this call, and I saw that in the state of Alabama, 68% of the population are homeowners. And then looking at Jefferson County, which is Birmingham, it's 63%, but Montgomery's 58%. So I think exactly to your point about the military base, you do have a revolving door of people coming and going all the time. So that will lower that, but these are very high. They're just high quality renters that you're getting in that are looking to that higher price point. So that's really interesting. It makes me feel more comfortable in not going after those, 8, 9, 10% cap rates, but really feeling comfortable on, better neighborhood area scoring areas with a little bit lower of a cap rate, but still getting the solid returns with a low tax base and so forth. So all those things together add up, and definitely are reasons why we wanted to come to your market.
Yeah, and I'd say there's also an influx of people from out of state as well. On just helping retail buyers find the house for them to live in. I've run across from a lot of people from out west, like uh, Washington, Oregon, Colorado, and they're moving this way. They've sold their house and they have a lot of equity that they've built up over the years, and they're moving here. I've talked to people from Florida. I have somebody from Boston right now, and since COVID, you have a lot of people that are working remote, so it allows them to live anywhere in the world. We have a low cost of living here, lower property taxes, and they can come to Montgomery and buy an amazing house for a reasonable price. And I'm seeing that a lot as well.
And Michael, I'm curious to know, and for all of our listeners, kind of a couple different questions. So one, what is a typical purchase price if you had to describe it for, say, a 3-2 single family? What would that property rent for? And then the third part of that is, how should someone be calculating their property taxes as an investor? Go.
Okay. So like a 3-2 brick ranch, usually we're looking at anywhere from probably 79,000 to 130, 140,000. And the rent range, for the most part, is going to be around, 850 to 1100. And most of it's going to come right in there. Me being the property manager, I want to tell you 995. I want that $5 under 1,000. Just, I guess it sounds good. I don't know. So, but Montgomery East is a little neighborhood that's pretty popular. Those houses are 3-2s, probably 12 to 1,600 square feet, and central heat and air, built in the 70s and 80s, and they're going to sell from anywhere from 80 to 120,000, and they're just great little areas. They rent pretty darn quick. The price is the first metric you're looking at, and so there's things like renovating the kitchens, just putting in stainless steel appliances, or maybe, hey, let's go redo the tile in the bathroom, change it from this baby blue green to maybe a nice clean white looking tile in there, and that changes a lot. And those things can usually be done within a few $1,000s, and that may increase your rent by $100, $200 a month. Property taxes, the county revenue site is probably a really good asset for that. But whenever I'm putting these properties in, I'm trying to put the property taxes in there. And so, a lot of times the property taxes are, $200, $300, $400. And so usually, even if they doubled, it probably wouldn't be a large metric for you to mess up your equation. The property taxes is generally a lower amount. I've had people from Florida tell me that they pay $1,000 a month in property taxes, and just could not take my word that this is the property taxes for the house they're buying.
It looks like what you would charge on a monthly basis in most states. So
yeah. So the smallest metric that you're going to have to look at when you're trying to plug your equation in of what my ROI is going to be.
Wow.
And so on Roofstock, I'm plugging that information in, I'm checking it, I'm verifying it. It's a number that you can be relatively, deem it reliable.
Okay.
So I think that was a great way to cover, the basic everyday, properties that you run into. But tell us a little bit about maybe two things. One's caveat emptor, really, which is unique to Alabama and a few other states. But also, what are the most common issues that you run into? Because I think we could paint a pretty rosy picture for everybody, but it's always good to see the things that you see most commonly come up that aren't a deal killer. They're things that you see all the time. So maybe you can, talk a little bit about those two things.
Mark, do you speak Latin?
For one sentence. There you go.
Yeah, that's one you need to know. Yeah. Remember, I'm an auctioneer, so as is, where is, caveat emptor. Those are all things that are written in stone. You get burned once and you learn the hard way.
You never do it again. That's right.
So
that's it.
It basically means buyer beware. And so, it's, I think that any buyer looking to spend this amount of money is going to take a certain level of precautions and check out the house to a certain level. So, it's just basically saying that this seller is selling it as is. And so there's a lot of facets to a house, and you're going to have a home inspection. Most of the time you're already checking these things out. So it's it's telling you buyer beware, but these are things that you're already going to do. I don't, if you're in California, New York, or Texas, Mississippi, and you're buying an investment property, you're likely having it inspected, you're likely kicking the tires, and you're having a professional look at the house and tell you what to be aware of. In other states, you may have to disclose certain things or write a seller's disclosure. Here, it's not required, and it just kind of puts the burden on you to go over there and make sure the house is what it is, and that's part of the reason why an inspection period is important, and having an inspector go out and do a thorough job and check it out. Trying to think of anything. So, it's kind of funny. A lot of the houses I buy don't get a home inspection, because I'm buying the most terrible house I could find. It needs a roof. It needs an air conditioning. It needs everything. So what if something's wrong? Well, I already know it's wrong. It's broken. The whole house is broken. So,
I want it to be wrong.
There's no need. Yeah. The home inspector is not going to tell me something I don't already know, because I know that I'm going to have to redo the electrical, redo the roof. I'm probably going to go in there and have some plumbing problems I have to figure out. And so, that would be an instance where I'm taking all the risks, but I kind of already know that I'm at risk, because the house needs a ton of work, obviously. So
yeah.
So for the everyday buyer, maybe buying a more turnkey property or something that is rent ready, what are the most common issues that you would run into that really are common for, let's say, Alabama? In Mississippi, we were talking about being kind of a little bit of swampland, so foundation issues could be occurring a bit more often. But is there anything that you see in the inspections for these more rent-ready properties that you would just say is par for the course?
Yeah. So the houses I buy, I call them the junkie houses, because they're in terrible shape. I would never put those on roof stock, because if somebody wanted to buy this remotely, I would just insist on them flying here. Like, you got to come look here. I don't like, you need to see this in person, or you need to look at it. And then the second part of it is just not practical for them to buy something that they're going to have to run contractors and make sure the work's done, because the purchase price is such a small basis compared to what will need to be spent to get it into a livable condition. The average property I'm going to put on roof stock, or I'm putting forth to investors, doesn't need much work. I assume that all properties need work. And normally the way I say it is, hey, you can come to the house I live in. It's in pretty good shape, but I think I could spend $1,000 right now today on fixing normal wear and tear. And so when we're looking for properties to put on roof stock, I'm looking for the ones that need not much work, no capital repairs that I can that is apparent, and that will rent well. And those are the main things I'm looking to identify when I'm looking for a good property for an investor. And as far as the local areas, kind of pitfalls to look for, we're in a subtropical environment, so it's really humid here. We do have some of that gumbo soil where the ground will shift and move. There are different parts of our city that has different types of soil. Some of it's more stable, and you hardly ever see any kind of foundation problems. Then other parts where you're driving up and down the road. And I remember talking to an inspector, and he says, hey, look out there at the road. You see how it shifts and moves and it's kind of bumpy? And I said, yeah. And he's like, it's doing the same thing underneath these houses. And so it's like, it makes it real apparent where you might have foundation problems. And some of the older homes that are constructed, 70, 100 years ago, hardly any of them are on a slab. They're on a crawl space, pure foundation. You can get up under the house. If the foundation moves, you can jack up a pier and level out the house. those don't concern me so much because it's something that's easily fixable. You can get under the house and kind of level out the foundation or add a pier if necessary. A lot of movement that you notice in those houses might have came from where there was a water leak a plumbing leak at some time, and it saturated the ground, the pier sunk, and now the foundation isn't exactly plumb. And then there's areas of the city that has slab foundations, and there's a lot of movement, and I'm going to veer away from those. I don't, it's not so much about whether the tenant can live with a crack in the wall. It's almost that, hey, we go in there, we renovate the house, we paint it, and then 6 months later we have more cracks, or all of a sudden we have a pipe that's broken in the slab because the foundation's moved. And so those are things that I'm kind of nervous about. I've also ran into it where maybe somebody added on a house. I mean, not a house, added an addition onto the house. And so they've tied that addition in, but they didn't, the foundation wasn't set at the same time the original house was, or they tied the bricks in. And so now you see cracks in the bricks, or the addition is settled and now it's adjusted the main house a little bit. I'd go case by case on those because sometimes you can get a deal. There's been some settlement there, but I don't think that it's going to affect the plumbing, or the house is going to fall down, or there's any structural thing that's going to make the house collapse. But again, that's just my opinion. It ultimately will be up to the buyer. But it's one of those things that if I see any kind of cracks or any kind of foundation movement, I want to air it out, I want to talk about it and say, hey, this is what I'm seeing. And do you feel comfortable? Do we need to get a structural engineer out here to check it out? But the foundation is something that we look at that is very common in the Montgomery area. And it's a house by house, street by street thing. So I don't want to point it out to one specific area and say, hey, these houses over here are all bad. It's one of those things that you just kind of have to be on the lookout for and check it out. Something else that I think doesn't get a lot of attention is, trees on the fence line. Those things can be expensive. They can be a few $1,000s to take those things down. Whenever we're turning over property, that's one of the things that I try to pay attention to, and especially on my personal properties. Like, hey, if there's any trees that have grown up along the fence line, maybe my tenant hasn't paid attention to it. It's, heck, maybe they like the tree. I don't know. But now it's the size of my arm, but it's going to grow the size of, become a big problem eventually. So why don't we go ahead and trim that, cut it back while it's a small inconvenience, rather so than let it grow into a big problem. Wood rot around the fascia, soffit, or the brick molding around the doors, those are pretty common. I mean, I think if we looked at 10 houses, I could find a little bit of wood rot on the fascia or soffit or brick molding somewhere on 9 of those 10 houses. And so those are things that aren't real scary, but it's almost one of those things that I just want to set your expectation. Hey, just because there's a little bit of wood rot there, that doesn't mean the house is bad or the house is going to fall down. It's just one of those things that we need to go ahead and address it. Termites, we have termites here. Some of the older houses, for whatever reason, they don't tend to get termites that often. I don't know if they use some kind of strong chemical when they used to treat the older houses.
Asbestos and lead, maybe? No.
Yeah.
Lead injected.
You won't have
wood.
termites, but you might get cancer. No. It wouldn't be uncommon for us to go look at a house and find termites during the wood infestation report. And that's basically a pest guy going out there. He's licensed by the state, and he's looking around. And your home inspector will, most of the time they say they don't look, but they're looking. If it's something sizable, they're going to tell you about it or notate it. The pest guy, when he goes out there, he's looking at the sheetrock. He has a little flashlight, and he's doing a much more thorough inspection, looking specifically for wood-eating organisms. And it's scary to say, hey, my house has termites. And it's one of those things where you may have square foot of this, 1,300 square foot house that has a portion of termites there where it's gotten into a exterior utility closet right there around the door. It's a pretty commonplace. And you treat it and the termites are done. It doesn't mean your house is structurally unsound or going to fall down. So I feel like I've run across a lot of buyers that have anxiety about termites, and it's one of those things again to just kind of know what you're up against or what to expect if you were to have them.
That's great. I think it's so important because I know it's so market specific around the kind of nuances around common issues. And for some people, termites is a deal killer, but in the Montgomery, Alabama market, it sounds like it maybe isn't such a big deal. And so I always recommend, hey, go quantify the issue, whatever it is. Go figure out how much it's going to cost to fix it, and then figure out if you should be scared and run. Because it sounds like, even if there is termites, it's a relatively simple fix.
Yeah, I mean, sometimes it's the better thing that could happen because the termite guy will go out there, he'll treat it. He's done most of the expensive things to get rid of the termites, and you can get a bond at a discounted rate. And the bond insures the house against any damage caused by termites in the future. And so it's just this extra form of insurance that it's already been paid for at that point.
That's great.
So I think you've painted a really good picture on, the things to look out for. And thank goodness we have inspectors that, can be the boots on the ground, and, you will go out there and visit the properties. But talk about maybe a little bit of strategy. What are the things that, whenever you speak with a buyer, you wish they had this in mind before they made the offer? Because a lot of the times, a buyer will make an offer on our website and then we connect you with that buyer. So what are the things that you really wish that, you could get that message across just to help them really strategize a little bit better, or come in and have expectations that are probably going to be met?
I guess I probably sound like a little bit of a negative Nancy, but it's all really just trying to think of all the things that can go wrong, and lay those out there on the front end. That way the buyer knows what to expect. I think the thing is just to have an open mind. If we're meeting the metrics that you're looking to get, your returns, and all of a sudden we discover some problems, what do we need to do to get that solved? And instead of just saying, hey, this deal is dead, this is bad, I'd rather go back to that seller and say, hey, can you fix this up? Can you fix this or resolve it? Rather than just saying, hey, I'm not buying this house. It's a bad deal. I don't like it. Which is fine and acceptable. It's just that if we're really looking to get a certain return, and now we've had an inspection report and there's X, Y, and Z wrong, how can we resolve X, Y, and Z and still get the return that we're looking to get? So I've run across a lot of buyers that just after we have the inspection report and list out what repairs seem to be necessary, they just decide, no, I don't want this house, instead of trying to work through and figure out how can we fix this and move forward. And I think there's been several good deals that have been left on the table just because they just got freaked out by the report, rather than looking at like, hey, I got a hurdle, how can I move it out of my way?
Right. And a lot of buyers are making offers in markets where there is no room for negotiation, right? It's such a competitive market. And so I think going into a market like Montgomery and hearing that from you means, hey, you have negotiating power now. Now you can go back to that seller and possibly talk them down a little bit or get them to repair those items. So I think that's a great point, that these things shouldn't freak you out in the inspection. They're there to be addressed. And if you get them repaired, when the repairs were done on those items, and now you have a timestamp, on when those things were repaired, and hopefully there's going to be a number of years before it has to happen again.
Yeah, I mean, and it's one of those things that when you go under contract, that a seller's a bit committed to you too, because they're basically saying, hey, I'm not going to sell this house to anybody else, and I'm going to sell it to you. And so after your inspection, you present this inspection report to them. There might be repairs on there that they don't even know about. And so, I've seen some people that are very particular that, hey, I'm so sorry this house had this wrong with it. I didn't know about it, and we're going to fix it. That's not everybody, but I've seen some people that were very particular about their house, and if something was wrong with it, they wanted to know so they could fix it. At the very least, if you're staring down the barrel of saying, "Hey, this needs to be fixed," or "I need to walk away from the deal," at least let's go present that to the seller and say, "Hey, we got to give them the option to say, no, I won't do this," because more often than not, they'll say, "Yeah, I'll fix, half the items or all the items or some variance of that," and that at least gives you the option to move forward and continue with an investment that may be a great deal, instead of just saying, "Hey, these things are wrong with it, and I need to get away from this deal. I don't like it because there's $1,000 of rotten wood around the fascia." Hey, let's fix the fascia. Let's paint it. Let's caulk it. That's some maintenance issues that should have been resolved. We can present it to the seller, see if they're willing to do it.
Yeah, makes tons of sense.
That's awesome. I'm enjoying the wisdom of Michael Atkins. This is pretty in depth. I love it, because I agree. You're not being a Debbie Downer. You're just saying, hey, this is the reality of owning real estate. You're going to run into issues. You're not going to buy the perfect property. Even turnkey homes that you just renovated have things that come up. So I think outlining this in the way you have, where it's, hey, this is expected, is a great approach.
Yeah, I really believe in real estate. I mean, there's a lot of thought of trying to figure out how can I generate income, just in general. And real estate's one of the few things where I think you can buy it, and as long as you keep it in reasonably good shape, you could expect to receive an income from it perpetually. Some of these other companies ExxonMobil, you can go invest in them. They got a pretty good dividend. Will they be around in 50 years? I don't know. So it's just some of those things to look at. How can you invest your money in general beyond real estate and find something that's going to give you a return? And that's one of the things that I think is really attractive to real estate, is that you have a little bit of control over it. And, people are going to have to live somewhere. They're not making any more real estate. It's a finite asset. So it's not going to disappear as long as you take reasonably good care of it. I think that's part of the things that makes me passionate about real estate.
I think you're in good company there, Michael.
Man, that's awesome.
Yeah.
Any final questions?
So, Michael, my last question is, why should our buyers be interested in Montgomery? What do you see being there that others don't?
Yeah. So, I mean, I think we're a market known for our cash flow. We do have some really solidly constructed houses. There's a lot of 3-2 brick ranches. They're probably 12, 14, 1,600 square feet. We have a lot of jobs here that'll maintain that population and make sure we have a good tenant base to rent those houses long term. And there's a lot of opportunity going forward with the city.
Can you share with folks the name of your brokerage and property management company, and then let folks know what the best way to get in a hold of you is?
Yeah. So my brokerage is Harris Atkins Real Estate, and my property management company is BMB Property Management. And my preferred method of contact is probably to call me at my cell phone, 334-318-0570. Or if you have a lengthy question, probably shoot it to my email, atkins.realtor@gmail.com.
Fantastic. Well, Michael, thank you so much again for taking the time to chat with us today. Really looking forward to seeing how Montgomery continues to grow.
Yeah. Thanks, guys. Y'all have a great day.
Awesome. Thank you.
Alrighty, everybody. That was our episode for today. I hope you enjoyed it. I know I got a lot of value out of it. Tons and tons and tons of great wisdom information about the Montgomery market and what investors should be thinking about if they are going to be investing there. If you liked the episode, please feel free to give us a rating or review wherever it is you listen to your podcast. If you caught this on YouTube, feel free to subscribe and give us a like. And as always, we would love to hear from you about future episode topics or ideas and things that you want to hear more about. Thanks again for listening. Happy investing.